Well, Eclerx, that's a stock on our radar on the back of a good operational performance in the second quarter. The revenue growth was weak, but the margins expanded. To discuss this and what's the outlook going ahead, we have Mr. Rohitash Gupta, the CFO of the company, who joins us on the phone line. Hi, Mr. Gupta. Thanks so much for joining in. Well, in the first half of the year, you've delivered, a growth of around 1.8% in terms of dollar revenue growth. For the full year, what kind of a growth number are you looking at?
So our offshore revenues have been under pressure for some while, and in the near term, at least, we are not seeing much recovery in the offshore portion of our business. So I would say the performance for the year would remain somewhat in the similar range as what you have seen in the H1.
Okay. So, but we have seen an improvement in your margins. So margins have substantially improved to close to about 17% this quarter. In your press release, you've also spoken about some margin levers. What do you expect to end the year with in terms of EBIT margins?
I think in the near term, again, we see some strong tailwinds working in our favor as far as margin trajectory is concerned. And my comment is especially in relation to the Q1 onwards, right? Because Q1 was especially depressed. And I think we are working both on the offshore side, where we are realigning our headcount to the lower revenue base, as well as working on the margin improvements for the onshore, which has been growing rapidly and gaining some, mass and volume.
So can margins improve even from here?
I would say there might be upward bias through the rest of the year, but that will be highly predicated on where we go on the offshore revenue absolute quantum from here.
What are you expecting in terms of offshore revenue, the quantum of decline for the full year?
If you look, this Q2 versus Q2 of 2 years back, the absolute quarterly offshore revenue has declined by $2 million on a base of about $39 million, right? So that's the 2-year long trajectory. And as I just commented, we are not seeing any further movement from here on in the very near term, at least based on our short-term pipeline visibility.
Okay, all right. Mr. Gupta, if you could give us a brief sense in terms of what is your exposure to the United Kingdom, how much of your revenues come in from there, and that's still in limbo. So is that affecting your revenues?
UK has been a very small portion of our overall revenue, roughly 7 to 8% of total revenue. And but your commentary is right that there has been uncertainty for a while now among our UK retail clients, especially. And I would say this is likely to continue again in next few quarters, as you can imagine.
Otherwise, how are you assessing the demand environment? You said offshore you don't expect any recovery. What about the onshore revenues?
Onshore revenues have been in double digit for last 1.5 to 2 years, and we expect that momentum to continue in the rest of the year. And good thing is that with the scale, there comes a little bit of margin improvements, and that was one of the reasons why you saw, Q2 slightly better than Q1.
So double-digit growth for onshore revenue should continue?
That's what we expect as of now, yes.
Okay, Mr. Gupta, besides your operational performance, you're expecting not great revenue growth, but you're guiding us for better margin growth. So we'll have to keep an eye out on that front. But what about your balance sheet? Your current market capitalization is around 1,600 crores. What is the cash you have in your books at the halfway mark? And how will you utilize that? Any hopes of some buyback, some dividend payout, some acquisitions?
So we have about 627 crores as of September end. And yes, our cash generation has been very strong, and that's why this cash balance has grown substantially. In terms of payouts, we are committed to, give over a long term about 50% of PAT to our shareholders. And we will look forward to all the mechanics available when the 12-month moratorium gets over from our last buyback.
You've also coming back to the whole margin picture where you said there is a possibility of an upward bias. In some of the levers, you've referred to improving margin in onshore and client price hikes. Could you elaborate and quantify that?
That's right. So we have not got many client price hikes in last year and year before that. But in H1, we have seen some early successes in few of the client accounts, and we expect that this kind of discussion will continue with other clients also in remainder of the year. So that will provide some support for next year's wage hikes, if nothing else. So I think that is a positive compared to last two financial years, where we have not seen any price hike.
And what was the quantum of the price hike you managed to get out from your clients in the first half of the year?
So I would not like to quantify because we don't disclose it. But in prior financial years, actually there was a net decline. In this H1, there is a slightly upward movement on the pricing.
Okay, all right, Mr. Gupta, thanks so much for stopping by and in fact giving us all those details. Well, for the markets, we're still hovering below that 11,900 odd mark. What's standing out today is the mid-cap outperformance. Remember, in Friday's trading session as well, the Nifty ended with a cut of around 0.8% to 0.9%, but the mid-cap index was down less than 0.5%. So for the second day running, we're seeing a relative outperformance coming in from the mid-cap index, now moving to the high point of the day. But on that note, we'll wrap up on Chartbusters. You stay with us. Trading Hour comes up next.